Hello to all traders and welcome back to another market review brought to you by Orbex. So the Bank of England have held firm on any rate cuts at the moment, but have given a signal that probably in the next meeting they will start reducing rates. The service inflation was at 5.7%. This was probably a reason why they kept firm, because that is still a little bit higher than what they would have liked. But not following the Bank of Canada and the European Central Bank, it has actually kept on being a little bit heightened at the moment. So with that being said, is the Fed looking over all of this information to see if they're going to start cutting rates soon, or are they going to hold back and see how the market reacts to the Bank of England reducing its rate? A lot of rumours were saying that they didn't want to start reducing rates too early before the general election on the 4th of July, because that could shake up the market mood even further. So with that being said, are we going to have more of a discipline for some central banks before they can walk in the sense of rate cuts? We'll have to wait and see. So how's that affected cable? As you can see here on the 4-hour chart, just looking on intraday only at the moment, you can see from the recent peak of the mid 128 level, we've dropped just over 200 pips. Due to the Fed, progressive CPI data coming out of America last week, plus the Fed's economic signal, which actually had quite a big advance on the dollar across the board. But since yesterday's trading, as you can see here, we've had roughly about 50 to 60 pip drop. Retail sales coming out of the morning session for the UK sees that it's no longer in negative territory anymore, coming in from minus 1.8%, jumping to 2.9%. So that's quite significant for cable, but it hasn't really stemmed the tide of another move lower. So as you can see here, really starting to move quite far down. And in the near term, at least, we're just looking at the other levels. We haven't seen this particular level since roughly about a month ago, but are we going to start diving well and truly below the previous readings? We'll have to wait and see. Just wanted to touch on euro dollar as well. How can we not touch on the main dollar pair? And as you can see here, very, very progressive for the dollar. Like I said, from the back end of last week, with the progressive CPI data coming out of America, plus the FOMC projections, we are looking likely that the euro could be hit hard against the dollar. Will we get parity? Well, it is quite a long way off. We are treading just below the 107 level, but these things can happen. We haven't seen parity for quite a long time. If we just scroll all the way back on the hour chart, we're going all the way back now to the back end of last year, so over 7 or 8 months. But what a choppy ride it has been. As you can see here, very, very indecisive on the euro dollar, wave after wave, and now we're just coming down to another leg lower. So on the daily chart, it's looking likely that we are in this kind of V-shaped recovery to the downside here. However, on the intraday chart, if we just go back to it, we're just looking likely now to see if we can close this particular gap here, and we'll then recover possibly to the 109 handle. So 200 to 300 pips away, so it is quite a way to go, but it is not out of the realm of possibility. So just keep an eye on the headlines. Not too much going on in today's trading. We're just waiting to see what the next move is. We've got a host of HCOB manufacturing PMIs, and we've got global S&P, global manufacturing and services PMIs later today for the American session. So this could actually have a tiny bit of volatility, but we're not expecting too much in the sense that the markets are going to turn around. So just keep an eye out for any of the main fundamentals. And as always, we'll bring you all the latest on our Telegram and YouTube channel. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.